Hi everybody, Eddie here. Going to do a market update for next week. So on Friday we had this huge bullish day that completely reversed the markets a little bit right here. So on Thursday we have that big engulfing green candle, right? So when that happened, I thought today we were going to get more of a consolidation candle. So I thought we were going to test maybe 4,000, maximum 4020, and then get rejected and just kind of float around between 4,000 and 4020 for the day. But that was completely wrong from what actually happened. So um, I was actually short around 4020, and I paid for that. I actually ended the day pretty red. Compared, I'm usually green, but that day was just, I don't know, I was fighting the trend a little bit. So I was believing on the reversal would happen around that 4020 area because this was a huge area, right? So you look back here, this area has been rejected multiple times, and there was a heavy call wall right around that 4020. So I thought for sure, around 4020 is where it's going to land, and then get like a reversal back down, right? But we actually blow right through that, and we close right around that 4045, just right below 4050 key resistance. So 4050 is a very important level, right? If we can break through 4050, it's likely we'll see 4100, right? So if next week we gap up and we break through, we could see that 4100 area and fill some of these gaps over here, right? So there is a few gaps that still needs to be filled. So there's a big one right here, right around 4050, right? 4052, all the way up to here at 4080. That's one gap, and there's another gap between this one and 4090, right? So these two gaps, if we're going to continue higher, we're likely going to fill these two gaps and maybe get rejected right around right here. So this is the 4100 is the area that we broke down from. So that would be a pretty heavy resistance area for next week, right? So, but if we actually just pull back, retest this 4020 and hold, and then we break through everything, go up here, we can see a continuation back up, right? We could actually see a continuation and make a higher high, right? So right here we got a higher high, higher low, higher high, higher low. We bounce right at this key support area, which is that 200 period moving average, right above the megaphone top. So it bounced hard off that level, and the bulls seems to be in full control right now. So we'll see what happens next week. So if next week we get a consolidation back down and then go hit 4100, right? If there's room, we're going to likely to continue higher and then break this 4200 and come up to this 4325 for next higher high, right? So if we measure that move, let's see where it ends up. Yeah, so it ends up almost exactly around that area. So it will be slightly higher than this high right here. So if it actually hits up there, right, hits up this high, so chances are you'll get rejected right around that 4325, 4330 area, right? So that's a very important level. If we can break through this area, you can pretty well call this like a bottom, and then we may get like a rally up to retest the highs and then get a big sell off, because I'm still thinking like in the next year or two a recession will come. So it's leading into a recession, but that doesn't mean that we won't go up this year, right? This year we could get like that big FOMO rally, and then once a recession hits, then we get like a big waterfall down, right? So because if you use the larger time frames, right, right here we're just in this consolidation area, right? We're still in consolidation within a in the weekly chart, right? And right now it looks fairly bullish. It looks for like a continuation back up and bouncing off this level. So if we do get a confirmation, which is breaking this 4200 high, right, to make a higher high into that 4300, it's likely we come up. Scenario being like we come up, we come back, and then we go up, and then come back, and then go retest the highs. That would be a scenario That's the bullish scenario if it does work out that way, right? If it doesn't, the bearish scenario would be, we hit that 4100, we couldn't break through, and then we just kind of come back, right? And then you can go the other way, right? So that can happen as well. But so far, everything's looking very bullish. The weekly chart's looking actually really, really good. We just need confirmation by breaking last week's high. Once we break last week's high, which is that 4060 area, once we break through that, and then it's 4100, and then likely 4150, 4200, and then possible 4300 by the end of the wave. So that is what I'm looking for. And on the monthly chart, you can see that we're actually in a pretty tight consolidation range right here, right? So it needs a follow through, meaning we need to break above 4100. If we can break through 4100, that's a huge statement, right? If it breaks through 4100, it takes out all of this consolidation area. So you see, just gonna hide my alerts so you can see better. All right. So if we break through, you see this level right here, right? This is the key resistance area. You can see that every single time we hit here, we get rejected, hit here, rejected, hit here, rejected, and we're coming back up again. So if this time we finally break through it, that's a big statement that we're going to actually go continue higher. And then we're going to test the highs and possibly make new highs, right? So if we make new highs, we can actually continue go up for a while. If we don't, if we end up making a low high and then like flush down to make a low low, then you want to be very careful, because if that's the case, then if you zoom out, this is a pretty parabolic move, right? In the last, since 2008 recession, we've been going straight up, right? We have a few blimps here, a few blimps here for COVID, but other than that, there's really no significant pullback, right? This is the biggest pullback we had ever since 2008. The pandemic doesn't really count because we literally recover in like a couple months. So that's more like a black swan event, right? But this is more of a bear market, right? So this would be the first bear market, and it's not really the bottom of the bear market just yet, right? We need to actually make a swing high in order to rule out this is the bottom, right? So if we don't make a new high and just going to fail, then it's very likely we make a lower high and then start coming back down. It could end up to be a pretty sharp sell off, right? It can be pretty significant sell off. But so far, everything looks good for the next run up. And if you measure like the move from the COVID lows, so from COVID to here, all right, you see how we pull back all the way to the 50% region and we're holding. Well, if it does work out, then we're going to end up going much higher from there. So we could end up making a whole new high. And if that's the case, it's going to be pretty bullish on the next run up, right? So if you measure the move, right, it can go up to like almost 6,000 points on the next big bull cycle. So if this is the bottom of the bear market and this is the start of a bull cycle, we're looking around that 6,000 point for the next bull run all the way up to here, right? And that can happen if things go well, everything's priced in, we can actually hit that 6,000 pretty easily. But looking at everything the way it is, talking about whenever the Fed raises interest rate like this, it usually leads into a recession. So I'm more leaning towards somewhat of just a short-term formal rally and then a big flush down for the recession. All right, short term, we're bullish. And if you look into the hourly time frame, where this move has been very, very extended. I was actually trying to short this right around here, and then it kind of blew through it, right? So the target is actually this gap, this 4052 gap. So on Monday, you want to see if we'll hit that 4052 gap and then get rejected down, or we're going to actually just run right through and go for 4100. Because if it runs right through and go for 4100 and then gets rejected 4100, then it's more of a lower high scenario, and then we can come back down, and then we're going to see if it holds like a holds on the retest of this 4020 area before it can go any higher. So if it goes up to 4100, the 50 percentile area will be around that 4010 4020 area, which is right around this breakout area right here. So this is the area it broke out from. That's the area I was looking for resistance, because this was a major volume shelf right here, and it just kind of blew right through everything, right? So that was a very big statement. So next week, what you really want to see is a retest. Sorry. Come back, hit here, bounce, retest, and then go for 4100, pull back a little bit, and then run up. That would be the bull scenario, and this would be more like a rounding cup and handle type of pattern. If that's the case, we'll hit around that 4150, 4200 area, and then possibly continue higher, right? So you can see right here, we have that cup and handle right here pattern. So it was a down, made a base, cup, and then the breakout. So now we're just coming back, retest, and then hopefully you'll continue higher from there. So let's take a look at the Qs. Qs are pretty well the same thing. It had a very significant move. There's a bunch of gaps here that needs to be filled. So, that would be your target. You really want to see it fill the gap right around that 303 area. Once it fills the gap, then you can go test the highs and then go higher from there. So it would be very much like the SPX. So the Qs are catching up a little bit now that we're finally above the 200 period moving average. So your goal is actually a breakout above this 31, let's call it 3115 area. All right. So this is a very key area to break out from. If we can break through here, it's very likely we will go for this high and then possibly go for a new high after that. Right. So this is your target. So this is your first target right here. This is your final target. And then once it breaks through this target, then you go for other stuff, right? You just go left and see where the peaks are, and those would be your next targets. But your main target is actually this right here. Once we hit this target, you want to watch it very, very carefully to see which direction it's going to go. You want to see either a rejection. If it's a rejection, you're looking for support on the breakout. If it breaks right through it, then you're looking for the next. There's a gap that needs to be filled right here, and then you go for the swing high right here, 370. So it can be a pretty good rally up. So I do have some swing trades on. I closed some off. I sold some puts that decay about 50% or so. So I took some profits. But I still am looking to grab some shares of some of the FANG names. And I still haven't got assigned. The only shares that I got signed with are Amazon and a few other of the high growth names. But other than that, I don't have any of the FANG names just yet. So I'm trying to lowball some stock and just not working out because I'm just keep making income off of it, but I'm not getting assigned any shares. So next week I'll see what happens. If we can break through it, then I'm going to start selling some at the money puts to grab some shares. But other than that, I'm just going to continue to do what I'm doing and just making income while I wait for the stock to actually have confirmation that we actually starting a whole new bull cycle, right? All right, let's take a look at IWM. IWM is the small caps, and it's very much just like the other charts. This looks like a very good base right here. We're looking for a breakout of the base and then come retest this breakdown area. This would be your target right around up here. If it does go up, it looks very much like a round and bottom, like a type of a form of cup and handle forming, right? So it could, work out to be that way. MDY, it's much stronger than the other names because MDY It's actually moving quite well. We're almost back to the highs, the all-time highs already. So it's very close to the all-time high. So that's where all the money's flowing into. So I would keep a close eye on what's in there and start trading some of those stocks. It seems like mid caps is leading the way out of this bear market and not the large caps. All right. You can look at the Dow. The Dow's actually kind of struggling a little bit. We're still up high, but it's not making a higher high like the other indexes are. It's lagging. It's consolidating sideways. This looks more like a top and then a lower high and then maybe a come back down. So keep a very close eye. I'm going to like you want to set an alert right here. If it goes below that area, it's done. It's going to come like flush down if it breaks down that area right there. All right, let's take a look at some stocks. Oh, somebody asked me about what's happening next on the SPY on the SPX. Well, I just kind of explained some of that already, but the short term, we're looking for a continuation to fill these gaps. That's it, right? Will be my final targets, 4,100. And then at 4,100, I want to see what it does before I make a decision, right? If you can break through 4,100, then definitely I'm going for 42, 4,300. If it does not break through that, it's likely it's going to come all the way back down. It's going to retest this 4,000 4020 area. And if that area does not hold, it flushes. If it does hold, it's likely we're going to continue higher. So, those are the two very key areas is that 4050 and 4,000. Above 4050 is bullish. Below 4,000, bearish. That's all you need to know. All right. Apple still pretty good. We're still above the standard deviation, so we're still around that one standard deviation right now. You could go up to two standard deviation, which is up top right there. So it is still in a downtrend. Still a defined downtrend, right? So it really needs to break out. It really needs to break out of this high, retest this high, and then make a new high. That's how you know it's going to continue higher. If you look at the weekly chart, right, this to me looks like it's very extended. It needs to consolidate, right? It needs to consolidate before making a new high, right? It does somewhat looks like a bull flag as well, but it's a very extended one. So you want to be very careful. In order for this bull flag to work out, it really needs to break above that 160. Um, Otherwise, it's likely it can break down because the monthly chart is right at that 8 and 21. So the range is tight. So this is the area where it either starts the new wave up or it kind of rolled over, right? So those are one of the things that you really want to look at when moving averages like this, because you can see how extended it is, and then it just kind of consolidating sideways. So usually when it consolidates sideways in a bull market, it continues higher. But we're still in the bear market. We're just starting to look like we're getting out of the bear market, but we're still in the bear market. So, it can still come back down. And if it does come back down, you're looking about 115 area. AMD. So AMD looks like a continuation, just like the index. You got the moving averages all stacked with 200 right here. This is a very good entry point. If you want to go in, your risk is fairly small. You can go in for a swing trade, just go smaller size. You can enter, set your stop right around here. If it breaks below that, then you're out with a small size. If it breaks above this high, you can add, and then you're going to aim for this high over here at 100 to 105 area, right? So that's the way I would play it. The only thing I have of AMD are some puts. I sold some puts for some income. I sold them at different levels, and they're pretty good decay right now. I might grab some shares next week, and maybe I'll trade some leap options as well on this thing to see if it'll go just a small amount and see how it works out. But right now it looks fairly bullish, right? We're in the downtrend. we've broken out of the downtrend. We have a higher high, higher lows, and it looks like he wants to make a continuation higher. So AMD is definitely a stock you want to watch. And yeah, it's fairly cheap compared to Nvidia. Nvidia, it's way extended now, so I wouldn't buy Nvidia. I would buy AMD. Nvidia has room to go still. It's gone parabolic, but it can actually go even more. Maybe fill this gap in before the pullback. So, keep if you're not in Nvidia, I wouldn't go in it. If you're in it already, I would set a stop like right here at 225, right? Slightly below, maybe 224.50, right? So yeah, that's how I would play. I would ride it there. I would just trail it up till it breaks down. Because this is very extended already. And there's a gap right there. That's a pretty big gap. So if like next week it doesn't work out, we get rejected 4100, you can expect that Nvidia will be the first thing to drop. It's like these can drop all the way back down to 190. So you want to be very careful when it goes parabolic like this. So yeah, when it goes parabolic, I mean, it went parabolic before, right? So this move right here looks very much like this move right here. So, you want to be very careful on how you want to trade this. If you're in it, you can trail it. If you're not in it, I wouldn't play. I would play AMD instead because AMD is just starting off the bottom. So AMD has some catch up to do with NVIDIA, right? So if it does, aim for that 100, 105 area for AMD. Amazon's still in a downtrend. Like there's this following wedge thing going on right here. And it's still within the wedge. I do have some shares that got assigned on this thing. And then I sold some strangles on it to get some income, but I think it's just going to chop around to the range, gets more tight. And then it needs to break above that 200 period moving average and above this trend line right here in order to change trend and go higher, right? So it's still during the consolidation phase because it's right around this demand zone right here. So this is a heavy demand zone. It's just going to kind of turn around till things change. So I mean, it's good candidate to do like a wheel strategy or some income strategy off this because it's in the range. So you can sell iron condors, you could sell just cash secure puts, you could sell credit spreads if you wanted to at a little bit further out. But what I'm doing right now is actually just selling puts. I got assigned my puts on my first layer. So I'm selling puts on my second layer, and I'm also selling some cover calls. So I'm kind of selling a strangle, but I don't care if I actually get assigned more shares. So that's the whole point of the accumulating a position while trying to collect income at the same time. Um, Meta's been good. Like it didn't. I thought it was going to fill the gap first. It did not fill the gap, and it already exploded back up. So that's a very strong sign. This could be a gap and go scenario. It is way above the 200 period moving average now. So and it is have like a major bounce off this level. So this is the area that you want to see it to start consolidate, right? I want to see this thing consolidate a little bit more to create somewhat of like a maybe like a bull flag of some sort or some kind of consolidation flag or even a triangle of some sort, right? Something like this, right? And then a breakout, a big breakout. So that's what I want to see. Right now it's extended off the bottom, right? It's a pretty big move up the bottom. It needs to consolidate a little bit so it can build up energy for the next big move up, likely earnings, right? So if it can consolidate leading to earnings and then somehow they announce some good earnings, you can see this thing pop all the way back up to this 240, 250 area. 250 is the big gap, right? So it'll work its way back up to this big gap. And then eventually, if things are good, it's going to fill that big gap, right? But it's got a long way to go, right? So to trade at, you could just sell some puts at these some of these key areas to try to grab some shares for the longer term. You could start a small position right here and then just set a stop like below 200, right? You need a pretty wide stop on this because it already moved so much. it's likely it'll come back. But if you want to hold some shares there and then just somewhat do like a wheel strategy, because it is low enough to do a wheel strategy. So you can do that if you want. Right now, I'm not in it. I would be looking interested to go back in it if it comes back and fill this gap. If it comes back, fill this gap, or sell some at the money puts, or I grab some shares and maybe a leap and play the long term. But other than that, at this level, I'm not really that interested. I may sell some puts like around down here just to see if I can grab some shares down here. But other than that, I'm not going to touch it. Google. So I did fairly well with Google, selling just cash secure puts because it's in the range. So whenever it's in the range, I'm selling it at 90, 85, 80. So I'm selling them like 45 days out. So I'm collecting some good income. Whenever it decays about 50%, I just take them off and reopen new ones if it's still near the bottom range. So that's what I've been doing, just collecting a little bit of income while I wait for the stocks to come down to the price I want to buy it at. Because right here is just consolidating. It's still below 200 period moving average. So I'm not in a hurry to get shares because I like to own shares when they're above the 200. When they're below the 200, I'm very careful on where I want to own the shares. So I like them in the lower range, which is around that 80, 85 area. That's the area that I really want the shares at. Because I plan it to add some more if it comes down to the 70s, right? So if it does come down to the 70s, that's where I'm going to go heavier on. But up here, I'll try to grab a position. I'm in no hurry. I mean, I don't mind sitting on cash while collecting income. Because if everything start going well, I can go back in pretty heavy and make some pretty significant returns as well. Because you're more lean to deploy more cash when the market is fairly bullish, right? When you can confirm a bull cycle is starting, that's when you want to deploy all your cash. When you're still in a bear market condition, the most you really want to deploy is about half your money. And that's layering into it, right? So that's why it's important to get exposure right now because we are above 200. So you want to deploy about 1/4 of your money, right? And then if things work out, you can add on to it. If things don't work out, you have another quarter that you can add while you're still below 200, right? And that would be your maximum position under 200, right? It needs to be above and continue higher before you deploy the other 50% of your cash. The reason being, you want to be able to have some cash when markets get to desperate levels, like capitulation levels, right? Some you start seeing some capitulation already, but it can really go down further if economic conditions change, right? There's still a chance that we go into a recession probably like end of this year, maybe next year. So we got 2 quarters to move. If the market makes new highs within 2 quarters, take advantage of it. Because if by the end of the year we start seeing some economic numbers that hints a recession coming, or is in a recession, then you can see the market tank pretty quickly as well. So you want to be very careful on how you want to play that. Having some cash on side is how you're going to save yourself, right? So that's why I'm very careful when things are happening the way it is right now. It's a very tricky bear market because it's not like a standard bear market. Usually, bear markets happen with a recession, right? We are still showing like strong economic numbers, just that interest rates are keep going up, which will trigger a recession along the way. So that's how it happens, right? So, but in the meantime, enjoy the volatility, enjoy the bull run, and then when things change, then you get out. That's how you play. So Microsoft is good. It's trying to break out of this 200 again, right? It came down below 200 and now we're going back above. So we are making higher highs, higher lows as well. So it's more of a base thing. It does somewhat look like a bear flag. So it really needs to break above this high to really confirm that we're going higher. Microsoft is one of the names that I did not sell anything on yet because it didn't come down far enough for me to really want to start position below 200, right? I wanted to see a pullback of at least 50% on this on the highs to do it. So I missed my chance over here. So right here, I I'm looking to see if it'll hold and make a new high. If it holds and make a new high, then I'll buy in the next retest, right? Because right now we're just starting to break out this area. They do have earnings coming up pretty close soon. April's not too bad. So to play this, you could just grab some shares, sell some credit spreads, grab some shares, and then do the wheel strike because it's probably going to base a little bit and then back and forth between 250 and that 300 area, unless we go parabolic. And then if that's the case, then I would go in with some leap options or just grab some shares and just swing trade that thing. That's most likely what I would do if I am going to trade this. The whole reason why I'm not concentrating too much on swing trades because that day trading is still pretty significant income for me, and I'm still in that mindset of do not want to hold anything overnight just yet. So I'm just deploying my cash very slowly on stuff like that. Netflix right here is at the bottom of the range. So it is making higher highs, higher lows. It is above the 200 period moving average, right? So it's pretty close off this heavy resistance area and it got rejected the first time around. So for next week, you want to see a hole right here and then break back up. If you can break back up, you can make a new high and then you're going to retest this area once again, right? Maybe the upper range of this area, see what happens. So we talked about Nvidia earlier. Now Tesla. Tesla's a story. It's in like this range. Yeah, I thought I was going to break down, which you did right here, but it got bought up. Of course, it got bought up. It's Tesla. Um, if this fails, if next week we cannot break through that 8 period moving average, if we cannot break through the areas, likely we're coming back down, and we're going to come back down to around this 160. I would aim for 160, which is this low right here. Also around that 50 period moving average. There's a gap down here that needs to be filled below 150 as well. And if you measure the move from the bottom to this peak right here, right around that gap fill is that 0.618 area, which is a golden ratio on the Fibonacci ruler. So, if it cannot make a new high, if it gets, or it can run up and test the 200 again, and then most likely it's going to get rejected. If you get rejected here once again, you're looking down here, right? If you get rejected right here at the 8 period moving average, it's coming down here. So, be very careful of that. But if you can break through here, if you break through this area, it's definitely coming up to the 300s if it breaks through right here. So this is a very important level to look at. So this your ultimate area would be like breaking above this high right here, right? Breaking above this high. That's where you can confirm that we're likely we can go for this high right here around 300. Other than that, right now, I'm not bullish just yet. I want to grab some shares down here. I'm kind of hoping you'll pull back and come back to around that 150, 160 region so I can grab some shares on that. And the premiums on Tesla is very juicy as well. So you can sell some credit spreads, sell some puts, and try to see if you can grab some shares at the cheap now that we know that the market's above the 200 and there's room for it to continue higher. If it does go higher, then likely Tesla's just going to explode up, right? So keep a close eye on these levels. The way I trade is very simple. I look at levels, I look at price action, right? I don't really care what the economics, what the macro picture is. I only care about what is the stock doing at that current time. Right? That's the only thing that matters to me is technicals, how it moves, how volume comes through, where is it coming through, which level is it breaking, which level is bouncing, which level is getting rejected. Those are the areas I play with, right? And those are the levels that are important to me. So even though there's a recession that could be coming by the end of the year, I really don't care. I still would trade it if the setup is there, if the volume is coming through. uh, so if there's a volume, there's the price is moving, making higher high, higher lows. I'm just going to keep buying up, right? Until things change. That's how you should trade market as well. Don't try to get like all these headlines get in the way of you making money, because a lot of the headlines are like delay reaction. By the time it comes out, everybody already knows at it. All the price is already priced in, and then it doesn't really matter. Right? So you just trade how it moves. So for me, if it breaks above that 220, breaks above two here, and likely is going to test this area to 240 region, and then breaks to 240, I'm aiming for 300. Right? Simple as that. If it doesn't break through here, it's going to come down to about that 160, 150. So, you know, and this is the box, right? This is the box. If it's going to break the bottom of the box, then short it down. If it's going to break above the box, then go bold. So simple as that. Let's take a look the aggro. If you actually follow the aggro on Friday, you would have made so much money on that. So this is the aggro. 5 minute aggro right here. You got a buy signal. It went all the way up to the close, from 39.40. Right? It's even at 2 minute, like you're having really good stair steps up moves on these, right? So if you follow whenever it's trending, the aggro works perfect. Whenever there's big waves, they also work perfect. The way that I use the aggro is, if it's in a tight range, choppy environment, I use them 1 and 2 minutes. Sometimes I use 15 seconds to trade short-term scalps, right? If it's a trending day, you can use the aggro to trade the 2 minute, 5 minute, 10 minute, and then you see a more bigger picture, and you can make a lot more money when it's trending like this. And I do use internals to guide me through this. Some in majority of time you want to follow the trend. Like I said on Friday, I don't know what I was thinking. I was just going against the trend. It's just one of those days where I'm off. Uh so anyway, yeah. Um if you're interested in getting the algo, it comes free with our Discord. If you're interested in how we trade, how I trade, how I plan my trades, and how I go through my daily routine, join our day trading course if you're a day trader. If not, we also have a swing trading course, which is my advanced level 1. So if you guys are interested in making some money in the next bull cycle, check us out, leecapitaltrading.com. Make sure you like, subscribe, and I'll see you guys next time.